All right. Good morning, everyone. Again, this is going to be the last pre-market call until June 20th. I'm doing a little trip to Italy, so I'm going to have really crappy service and going to try to enjoy my time there. So this will be the last one for next couple of weeks. And then once I'm back, we'll get back to the normal swing of things with these pre-market calls. So again, we talked about that in the big picture. And I know Sheikh highlighted this well in his newsletter. We want to keep an eye on this, major base area in the SPY. We did start to finally break the prior level of 420 that we've been watching for the entire year. We had a phenomenal close on Friday. We're gapping up today. So all good signs that we should be finally pushing through this 420 area that's been the battleground for the better part of the last year. And now it's really just the final resistance level within this base is what is 430. Once we clear that, we should start to see that steady climb back towards the retest of the prior all-time highs, which we're seeing pretty clearly in the Qs. And this couldn't be more of a textbook example of the 4 stages that we try to teach you guys in some of the early stages. We see the very clear breakdown stage, we see a very obvious basing stage, and then we see the breakout stage back to high. So we're kind of in this this area in the border markets right now. And now for the tech names, it just as extended as they are, and they get even more extended and everything looks amazing and AI is going to take over the world and replace everyone's jobs, that's when we want to take profits. And then when that story starts to pull back into major support, that's when you want to kind of load back up. So right now we're on the more extended side of things on the tech side, broadly with S&P. We're not wildly extended, we're still within this space, but it's definitely very obvious where all the action is. It's obviously clearly all in tech. So if you're in those names, that's great. Try to be patient with them. Definitely look to take profits into this gap up. Again, this is, for the tech sector, this is major resistance. It's a major pivot high. We're gapping up right into it. This is like the names that you've been holding from last week. This is a perfect time to, take profits. These are, extremely vertical moves. These moves do not continue into, into the future in the same path they've been on. They might have 1 or 2 more days up, but eventually, just as quickly as they come up, as quickly as they come back down. So if you're luckily to be a part of some of these big moves that some of these names have had in the last week, you want to be more of a net seller this week. You do not want to be trying to join the party, chasing some of these names after these massive moves that they had. Again, other than the tech sector, it's been kind of muted or somewhat boring action for the rest of the sectors. We can see the industrials, we can see energy kind of setting up here, very nice flag in the industrial space. So when the money rotates out of tech, when this gets to the upper end of its channel it's been in, and people start to take more profits and they have to rotate somewhere else, industrials look phenomenal. Energy is still within this wedge, so we might need to see a little bit more of this pattern to develop before there's really a definitive way of where it's going to go. But we want to avoid healthcare. We can just see very clear, it's just aging over into support. Same thing with consumer staples. We get that very nice run up into major resistance. It looked amazing up here, and then it starts to fade and it looks horrible. And that's something we will start to see with the tech sector was, as it continues to look amazing on the way up, eventually it'll stall out and start to roll over. And then everyone will have the difference of opinion. But right now, it just all looks very good. REITs we want to avoid as they're rolling over, the risk-off sector, utilities, aged over into support. So we can see that as as great as the market looks from the surface, the S&P looking like it's breaking out, tech breaking out. When you look under the hood of a lot of these sectors, we're not seeing the action across the board. We're seeing it just very specifically in one or pretty much one space. Individual stock wise, again, I don't have any orders in the system. Again, I'm going to be traveling later today, and I try to do my best to not trade while I'm away. I've always found it to be takes away from the joy of enjoying that time away from the markets. But this ROST is basing nicely through this 106. Earnings are out of the way. So this one, again, it's still in like a 6% range, given the risk you have to give it. But if this can tighten up and you can get in through 106, versus maybe 103 or 104, it could be worth, a nice little base break for that eventual move back to 120. But other than that, again, a lot of names that I was keeping an eye on, all got kind of smoked last week. When just looking at the broad market, you wouldn't have expected that. So if there's any top ideas that you guys want to go over now, we definitely can go over them. If not, this will be probably our quickest pre-market call. So Blake, Julie, Brad, if you got any ideas you want to go over, definitely post them in this group or unmute yourself and we can go over them if you'd like. All right, so just before you hit HPQ, this ARRY also has been flagging pretty nicely through this 24. Again, right now you're still giving it probably $2 risk, but when it turns back up through there, you probably can risk maybe $1 in this name. And pretty nice little level that's been setting up for almost a year now. But let's take a look at HPQ. Okay, so again, I'm not the biggest fan of Hewlett Packard. It's kind of similar to like an Intel type of name, where just kind of the older tech. Again, tech has been breaking out extensively, and this HPQ has kind of been left in the dust here. I definitely can see the level you're looking at here through this call 31.5. So I can okay, maybe hold on. Let's take a look. Okay, so definitely see the base here. I just don't like that the fact that tech names haven't breaking out dramatically, and this name has really not done much. But if you can buy 31.50, I would be again buying it today, already gapping up above that. You'd be buying kind of third day up. If this can consolidate a bit, first 30, you can look for an entry, but you just want to be aware that this setup and this type of name, when tech has already done what it's done, and this is still kind of running in place, I wouldn't expect fireworks through this 32 area. Maybe you get a move to 34. You probably get like realistically a move to here over a week or two span. But if you're going to have to risk, buying 32 versus 30 to get a move to 34, I'd probably pass on. If you can get in through 32 versus say 31, or risk $1. So then maybe that's a different story. But just you want to be aware that if all the sectors are hitting new highs and this sector is not, or this stock is not, just want to be aware of that. So again, guys, it is beginning of summer trading, so it'll be a little bit slower for the most part. We definitely don't want to chase this Monday morning gap up. Definitely be a little patient and just wait for your top ideas. I guess we'll see you in a couple weeks.